Yes, people. A very happy to all of you. So, guys, we started the revision batch in the last class with the very first chapter of the partnership series, just fundamentals of partnership. So, before we head forward, let's do a quick recap of what we discussed in the last class. Very important points alone we'll discuss. So, in the revision batch, cumulative revision is even more important. In the first page, what is important, people? The definition of partnership is important. Second, if they ask you what is the meaning of partnership, I'm sure you'll be able to write it in your own language. Thereafter, in the second paragraph, what is important here? In the nature of partnership, what is important? Here it says that as per accounting concept, business entity concept, your owner and the business is separate. The partners and the firm is separate. But from the legal viewpoint, law says for me it is one. Both partners and firm are one, which means if firm is not capable of paying the debt, if the firm's asset is not capable of paying the firm's debt, then the firm's debt can reach to your home, attack your private assets as well. Which means what type of a liability you're enjoying? Unlimited liability. So what is the liability of a partners in a partnership firm? The liability is unlimited. And all the partners are jointly or severally, means individually liable for their respective acts. So what is the meaning of jointly and severally? You discussed in the last class. Very important point. You cannot forget this. Then next page, characteristics of the partnership firm or partnership or essential features of partnership. What is the first point talking about? Minimum in a partnership firm. How many partners should be there? Minimum. Two. Maximum partners could be 50. So now the central government is given a maximum limit of 50. But the law has given the central government an upper ceiling limit. And what is that?
100.
Where is this maximum limit mentioned? In the Partnership Act 1932?
No, sir.
Companies Act 2013. Very good. Which are the three people or who are the three type of person who are incompetent to contract? A person of unsound mind, a person who is disqualified by law, third, minor. These three are not allowed to enter into any contract or agreement. However, the Partnership Act, with a special clause, they've said that a minor can enter into partnership, can become a partner, as long as by him becoming the partner, the partnership firm is benefited. So a minor could be added to the benefit of the firm. Once a minor is added as a partner, can he bear the losses? No. He will only enjoy the fruits. As a result, if there is any loss, he will not bear any loss. Minor, upon becoming major, what is he supposed to do?
Accept or refuse the partnership.
He has to give his confirmation whether he wants to continue as a partner or not. And within how many months he has to give the?
6 months.
6 months. Till 6 months of him becoming major, if he does not confirm it, then he will become liable to liabilities of the firm retrospectively from the day he was become as a minor partner. All the liabilities he will continue to take on his head. He'll bear the losses, all the liabilities as a normal person retrospectively from the date of him becoming a minor partner. Agreement is one part, registration is another part. Agreement is not compulsory. Sir, agreement is compulsory, but the mode of agreement, whether oral, audio recording, writing, that optional. If you have it in writing, it is called as partnership
deed.
Partnership deed or basically agreement is a place where all the terms and conditions between the partners are agreed upon. What is registration? Whatever points you have agreed in the partnership deed, if you get that registered with the registrar or with the local government, respective local state government, if you get it registered by paying the appropriate stamp duty fee, that is called as registration. Registration has got its own benefit. If you go in the court of laws in other places, this will act as a better evidence. If not, just prepare normal partnership deed in a stamp paper. 50 rupees, 100 rupees, 300 rupees, 500 rupees, 1000 rupees, whatever you want. You just prepare on the stamp paper. It is more than valid. Don't create the partnership deed on the A4 sheet. It should be on the stamp paper. What is the relation between the partners? It is that of an agent and principal. The agency relationship is there between the partners. There's an agency relationship between the partners. Clear this point? So agent is a person who does all the work, and through his work, he binds all the are the partners, including himself. He bind himself and other partners. So A, B, C, three partners. A, B are sleeping partner. C is a working partner. So whatever C does, that is binding on both C, B, and A. So what is the relationship between A, B, C versus C? Agency relationship, which means A, B, C is principal of C and C is agent of A, B, C. Rights of a partner we discussed. Partnership deed we discussed. All of you are comfortable. Now, coming back. The relation among the partners is that of a principal and agent. So first point, second point, third point. What is third point? Sir, what are the assumptions or the points that is laid down in the Indian Partnership Act 1932 in the absence of partnership deed, or the partnership deed is there, but the following clauses not mentioned properly or incomplete. So if the profit sharing ratio is not mentioned properly, what is the profit sharing ratio as per the law? Equal. What will be the interest on loan by partner? 6%. This 6% is given to protect whose interest? To protect
partner's interest.
So if partner is getting the interest, means who's giving the loan? Partner is giving the loan to the firm, and firm has to pay interest. If it is 0% here, loss is 0% here, who is the person affected here? Partner. Partner here is like a third party, not a partner. So we have to protect always the interest of the third parties. Hence this rule was developed. Keep that in mind. People get confused between loan to partner and loan by partner. Interest is 0 or 6%. People get confused. So loan by partner is 6%. Interest on loan to partner is 0%. Interest on capital 0%. Interest on drawing 0%. Remuneration to partner nil. So if you want remuneration, if the firm wants interest on drawing, if the partner wants interest on capital, if the firm wants interest on loan to partner, then what are they supposed to do? Get the agreement done. And in the agreement, get all these things documented along with the percentage and the respective value. If the partner wants remuneration 5,000 rupees per month, what is he supposed to do? Get that 5,000 rupees documented in the partnership deed. Every month I will take 5,000 from the firm. Like that, it has to be mentioned. If the data is not clear, if the partnership deed is not clear, law will say, court will say, nothing will be given to you. If you want, get it documented very clearly in the partnership deed. Next was the concept of loan by partner. Please tell me, if the loan is given by the partner, if the loan is given by the partner to the firm, what is the loan given entry?
Bank to loan by partner.
Loan by partner means firm is getting the loan. Very good. Bank account debit to
loan by partner.
Wonderful. All those are able to instantly get the answer, no? Which means you have done your revisions properly. All the other people who are not able to instantly think of a journal entry upon asking, which means those information is not there readily in your mind. One more time I'll repeat. Had you adequately revised? The moment I ask you the question, your brain will instantly throw the answer. Who's that online? So the moment I ask the question, if you're not able to answer it, which means it is not there properly documented in your mind, which means that requires more revision. Revision is not to harass you. People think, your revision will sit and study. Revision is a check on your own self, whether I'm able to answer the question spontaneously or not. In the 3 hours of examination, in the board exam, when you sit and write for 3 hours, no, there is no time. There's no time to sit and think for this question. Should I write like this or that? Should I draw this format or that format? There is no second thought process in any examination. The moment you read the question, you should be able to write the answer, tuck, tuck, tuck. There's no time to sit and think. If you want to get it to that level, then the revision will play a very vital role. Second, I told all of you, practice the questions with the timer. Practice the questions with the timer. You know how much time to allocate for a question. I've told you already. And when you do the practicing at home, you have to do with the proper format, the exact same manner how you write in the exam, no? Same manner you perform. Your speed will get improved. Anyways, coming back. So loan by partner. Who pays interest to whom? Firm will pay interest to the partner. So firm, it is income or expense? Expense. Very good. Interest on loan to partner account debit to
loan by partner.
Loan by partner. Third entry. Transferring this to P&L account. Why not profit account?
Charge against profit.
But this is a charge against profit. Here in this case, we treat the partner as a third party. All the third party transactions come in trading and P&L account. All the third party transactions come to trading and P&L account. When you pay salary to your staff, the staff for you is an internal person or third party? Third party only. When you pay rent, third party. Factory rent, third party. Electricity charges, third party. All the third party charges, expense and income will come into your P&L account. So this also as an expenditure should go to your P&L account. So the entry is
P&L account debit to interest on loan to
P&L account
partner.
debit to interest on loan to partner. Sorry, loan by partner. Okay. Now, if the payment is done, what is the entry?
Loan by
Loan
partner
by
to cash
partner,
or bank.
liability what is created. Upon paying, the liability gets reversed. Like how you make the payment to creditor to bank. This entry is like purchase account debit to creditor, expense to liability, purchase to creditor, purchase expense to creditor liability. Like that, debit is expense, credit is liability. When you make the payment to creditor, what is entry? Creditor to bank. Same way, reverse the liability, creditor to bank. Instead of creditor, here it is loan by partner. That's all. Next is the concept of loan to partner. Loan to partner. Who's giving loan to whom? Firm is giving the
gives
loan to partner. So what is the entry for loan given entry?
loan to partner
Loan to partner, bar loan advance to partner account debit to
to cash or bank.
the money is going out of the bank account. So bank account credit. And whatever money is going now out will come back to me in future. Because
Future.
I'm not giving permanently, boss. I'm giving a temporary help. It's a temporary help done by the firm to the partner. So firm will expect this money back in future. Anything that I get in future is asset.
Asset.
Record asset. What am I supposed to do?
Debit.
So loan to partner account debit to bank. So loan to partner is for us asset. It comes on the asset side of the balance sheet. Who is paying interest to whom? Partner is enjoying this money, so he has to pay interest to the firm. So for firm is income or expense?
Income.
Credit all income and gain. To interest on loan to partner account credit. Debit will be what?
Partner's capital or current
Partner's
account.
capital or
Current account.
partner's current account debit. Very good. So until we get the money from the partner, we catch hold of his capital account. We catch hold of his current account. Third, interest on loan to partner is a nominal account. It has to be closed by transferring to P&L account. In this case, there's a third party relation between the firm and the partner. So all the third party transaction goes to your P&L account.
P&L account.
The closing entry.
Interest on loan to partner to P&L account.
Very good. Interest on loan to partner account debit to P&L account. Third case, rent. Rent paid in cash.
Rent to cash.
Rent to cash. Rent payable.
Rent to rent payable.
Rent to partner. Rent to partner. Rent to A. If A is given the place premises on rent, rent to A. Like that. Rent to partner account debit to rent payable. Once the rent is paid, what is entry? Rent payable to cash or bank. Closing entry.
P&L to rent.
Rent and debit is expense to close. I have to give a credit.
Credit.
Rent to partner credit and debit will be to
P&L
account. So here the relation between the firm and the partner is like a third party. There's no principal and agent relation here. In these three cases, there's no principal agent relation. It's a third party relation. So P&L to rent. Can I say this is what we have discussed so far in the last class?
Yes, sir.
How do you feel revising this? You feeling better? Imagine the more number of times you revise. Instantly, the moment I ask the question, or the moment you see this question in the question paper, instantly the brain will give the answer. Such a blissful feeling. When you get a question and your brain is able to answer it, no, such a blissful feeling, I'm telling you. But for that, what is required? Your hard work, your smart work, revision is very important. This is not just for accountancy. This is standing good for all the subjects that you're going to appear in the board exams. Now, all this, I hope you're clear. Any doubts in this? No.
No, sir.
Liabilities of partners, are you clear? We discussed
Yes,
last class. Charge against profit. It is an expense, hence deducted from the revenue to determine the net profit and net loss for the year. All the charge against profit items are transferred either to the trading account or P&L account.
P&L account.
It is a stage before appropriation of profit. So here, under partnership, which transaction between the firm and the partner is treated as a charge against profit? So there are two transactions. The two transactions which will be treated as charge against profit. which happens between the firm and the partner. Any transaction happening between the firm and the partner, which is of nominal nature, normally goes to P&L appropriation account, everything. But there are two items. It will go to your debit side of P&L account, which is your interest on loan by partner and rent payment to
Rent.
partner. So these three things, rent paid to partner and interest on loan by partner, these both are charged against profit, goes to debit side. So what about loan to partner, interest on loan to partner? Arey Baba, this will also go to P&L, but this is not a charge against profit, na? Charge against profit means what? Expenditure. Interest on loan to partner is income. It'll come to credit side. That is why they have not mentioned this point here. Am I clear? Now,
Yes.
all the other transactions that happens between the firm and the partner, which is of nominal in nature, it is an item of appropriation.
Appropriation.
What is the meaning of appropriation of profit? Distribution of the profit. The profit is distributed in multiple forms. The profit gets distributed in form of IOC, salary, commission, remuneration, and then profit sharing ratio. All these are the ways in which the profits are distributed in accordance to partnership deed. It means appropriation of profit means distribution of net profit for the year among the partners under different heads as per the partnership deed. If they ask you one mark question, what is the meaning of appropriation account? What is the meaning of appropriation of profit? Exact same line you write in them. Beautiful explanation they will give you. So here all the expenses are transferred to the debit side of P&L appropriation account. So which are those items? Salary paid to partner is expense for the business. Salary is a transaction happening between salary to partner. It's a transaction between the firm and the partner. It's a nominal in nature. Will it go to P&L account? No. This will be treated as appropriation. It will go to debit side of P&L appropriation. Salary is there. Commission is there. Remuneration is there. Interest capital is there. All these will come to your transfer to reserves is there. All this will come to your debit side P&L account. What goes to credit side of P&L appropriation? Sorry, debit side of P&L appropriation account will go. What will come to the credit side of P&L appropriation account? IOD. Interest on drawing. That is a income for the firm. So what interest on drawing is, what interest on capital is, what salary is, what entry, everything we'll discuss maybe today in the upcoming sessions. Okay. So meaning we are yet to go in deep, but broader perspective of what it is we are trying to go through now. Sometimes in the question they'll tell you salary has to be paid. Salary has to be paid irrespective of the profit and losses. And where is it stated? In the partnership deed it is stated. Then that salary is an item of appropriation or charge against profit? Charge against profit. Which means, sir, this item of appropriations are there, no? Which is IOC, salary, commission, remuneration. Nothing, if the question does not say anything, no. The question is silent. All these are the item of appropriation. But the question specifically states that these four are to be treated as charge against profit. Then you will take them not to appropriation account, but to P&L account. One second. Okay, this point will come later. Anyways, am I clear? So normally these item of expenses goes to your appropriation account, but sometimes the question will specifically tell you to treat this as charge against profit. In that case, you will take it to the P&L account. And upon recording such interest, salary, remuneration, if the profit reduces or if the profit is turning into loss, don't be bothered. Don't be bothered. Any problem? No, sir. Okay. So interest on loan by partner is over, loan to partner is over, till rent we have completed. You have to come here, Moksh, because it's already up mode. गर्मी लग रही है. Manager's commission keep on pending. Will not do it today. So today we'll learn how to prepare the P&L appropriation account under 4 different cases. The 4 different cases that we have to look into. How to prepare the P&L appropriation account when the profit is more than the item of appropriation. Then how to prepare the P&L appropriation account when the profit is equal to item of appropriation. And then how to prepare the P&L appropriation account when the profit is less than the item of appropriation. Deadly case this is. Deadly case this is very important. High chances of this case coming in the exam. And finally, when there's a loss, how do you prepare the P&L appropriation account? The financial statement of a partnership concern comprises of trading account, P&L account, P&L appropriation account, and balance sheet.
Balance sheet.
All of you know in trading account what is to be done.
Yes,
You
sir.
need to do it. P&L account, you know what needs to be done.
Yes, sir.
Whatever you've studied in 11th standard, everything will come in trading and P&L account. In the 12th standard, the three things which is coming additionally in the P&L account. In the debit side, we have interest to loan by partner, rent payable to partner. Credit side, we have interest on loan to partner. These three are the new addition to your P&L account. So once you record these three in the P&L account, you'll get one net profit or net loss. That is the final net profit and net loss in the P&L account. That you're supposed to transfer where?
P&L appropriation.
P&L appropriation account. Now please tell me, in the P&L account, if you get final profit after all the item of charge against profit, you get a net profit of, let's say, 10,000 rupees. This has to go to your P&L appropriation account. Will it just like that go, or for that you have to pass an entry?
Pass an entry.
You have to pass an entry. What that entry is?
P&L to P&L appropriation.
P&L account debit to P&L appropriation account 10,000, 10,000. So very understand, sir. Very simple. P&L account, P&L appropriation account, trading account. What is the nature of all the three accounts? Nominal account. Nominal account. Debit all expense and losses, credit all income and gain. Profit ka nature is what?
Credit.
Income. All the profits, income, gain will have at what balance?
Credit balance.
Credit balance. This all of you agree?
Yes.
If I want to increase the profit, what I should do?
Credit.
If I should decrease the profit, what am I supposed to do?
Debit.
So can I say profit has credit balance?
Yes,
And
sir.
the credit balance, in order to increase, I have to give a credit, and decrease, I have to give a debit. Now, this is the profit. Imagine. So this profit is there currently in which account?
P&L account.
P&L account. I am supposed to transfer this to which account?
P&L appropriation.
P&L appropriation account. The moment I transfer this water from this can to the other can, what will happen? The profit here?
Reduce.
Decrease. So are you trying to say that the profit decreases in the P&L account when I transfer it? Yes.
Yes.
Correct, no? When you empty the bottle, this is a P&L bottle which has got water in it. If you empty it, this P&L bottle will become empty. Means profit is reducing in the P&L account. The profit is reducing in P&L account. Where is the profit increasing? In the appropriation account. To decrease profit, debit in the P&L account. To increase profit, credit in the appropriation account. Will you forget this?
No, sir.
Next time when you get a doubt, think about this bottle. Bottle means water bottle. Correct, no? People have their own imaginations. Bottle now. Anybody with that imagination? No. What I meant by bottle means some people drink milk in the bottle. No. That bottle, not what you are thinking. Milk bottle, I said. What did you guys think? Milk bottle, no. Pani ka bottle? Amul baby, chhod de. Now, loss will have what balance?
Debit balance.
Ashwin samajh gaya. Hey. Loss is what balance?
Debit balance.
Debit balance. Profit is credit balance, loss is debit balance. Debit all expense and losses. To increase loss,
Debit.
To decrease loss,
Credit.
This is P&L, full of losses. So this loss, where am I supposed to transfer?
P&L
appropriation account. So here when I transfer the loss from P&L account to appropriation account, the loss in which bottle is increasing?
In appropriation.
The loss in which bottle is decreasing?
P&L account.
P&L account. Now apply the rule here. To increase loss, debit. To decrease loss, credit. Now you tell me.
P&L appropriation to P&L account.
P&L appropriation account debit to P&L account. Okay. Now, simple way to remember. Very simple way to remember. This is P&L account. In the P&L account, two P&L will it ever come? In the P&L account, two P&L will it ever come? No. What can come? Net profit replacement is what? Two P&L appropriation account. So in the P&L account, two P&L appropriation. What is the entry here? P&L appropriation for the net profit. If P&L appropriation account net loss comes here 10,000, then what is the entry? What is the possible journal entry for this? P&L appropriation to P&L. So either imagine the bottle or imagine this P&L account and then do the journal. All the entries, gross profit, net profit, all is a result of a journal entry. Just like that, you cannot take a pen and write, oh, 2 net profit here. No. Am I clear? Am I clear?
Yes, sir.
Technically speaking, if you write 2 net profit here, then actual entry is not P&L to P&L appropriation. The actual entry is P&L to net profit.
Net profit.
Profit to P&L appropriation account. If you are passing an entry P&L to P&L appropriation, in the P&L account, what entry should come? To P&L appropriation only. Net profit will never come. But what are they doing? They're recording net profit. So in reality, what happens? If you have 2 net profit here, then there are 2 entries passed. One is transferring the P&L profit from P&L to net profit, and then from net profit to appropriation. If you don't want to bring the net profit in between, remove it. Then what is the combined entry? P&L to P&L appropriation. Am I clear? This I've been telling right from 11th standard. Now, let me prepare the P&L appropriation account. In the P&L appropriation account, where does the profit, not net profit, comes?
Credit.
Credit side, credit all income and gain by P&L
P&L.
profit. What are the maximum items that comes in P&L appropriation account? So, 2 salary, commission, remuneration, whatever you say, this will come, sir. Then
Interest on capital.
2 interest on capital, 2 reserves. I will not say only GR, 2 reserves. Then by interest on drawing. Correct? Now, very quickly, salary people, salary. A, B, C are partners. Out of the 3, A is a working partner. A is a working partner. A, B, C are having the profit sharing ratio equal. A is just a working partner. Imagine we give the profit to all the 3 partners equally. Who will feel bad more? A. Why will he feel bad? He's working. BC not working. He's working. He's getting the same amount of money. What the other 2 partners who are not working, they're also getting the same amount of profit. So there should be some differentiation. Profit sharing ratio is for the risk that you're taking in the business. Profit sharing ratio is for the risk that you're taking in the business. For the person who's working extra hard, you have to reward him by salary. If you don't do it now, today, A might happily work. But after a point, when A will take over the business, when A becomes a proficient in that business, we'll start fighting with B and C. It is because of me only the business is running. You donkey fellow, you're sitting at home and enjoying. I'm earning extra money, you give me extra profit. Or give me salary. There'll be a conflict. So if you don't resolve the conflicting matters in the beginning itself, starting stage, it'll be a big chaos at the end. Hence, the concept of salary was proposed. So if any partner is working in extra comparison to other partners, he has to be rewarded for his extra work. Either give him salary or commission. Some kind of remuneration you have to give him, so that for the extra hard work that he's getting, for the extra hard work he's doing, he gets some extra income. Nobody will do anything free of cost. Correct? No? Hence the concept of salary came into picture. So whenever you pass the salary entry, people, you have to always pass the due entry. Due entry means what? Expense to liability or asset to income. Due entry means what? Expense to liability or asset to income. So what do you think is a due entry here? Salary account debit. Salary account debit to what?
To partner's capital or current.
A's capital account. Here in this example, A's capital account.
A's capital.
Yes. So salary account, salary to A. Salary to A account debit to A's capital account. Let's say 10,000, 10,000. Salary is my expense. Even though you make the payment, you have to show the liability in A's ledger. Why? Because when I open A's ledger, I will understand throughout the year, I'm paying money to A in what all different forms. To directly record salary to cash, I will not know throughout the year how much money I've given to A in form of salary or IOC or commission. I will not be able to know. So I want to gather all the information in one common place called as partner's capital account. So when I open the partner's capital ledger, I get a bird eye view of what and all transaction took place between the firm and the partner. How much I have to give in form of salary, how much I have to give in form of IOC, how much I have to recover in form of interest on drawing. I'll get all the adjustments in one single ledger. So everything here has to be routed only through partner's capital account. Even though you make the payment on spot, you always have to route it through partner's capital account. Now, salary to A is a nominal account. You have to close it by shifting to the
P&L
appropriation account.
appropriation.
So what is my closing entry?
P&L appropriation account
P&L
debit.
appropriation account debit to
Salary to A account.
salary to A. So in P&L appropriation account, to salary to A is visible in your ledger. It is because of the nominal entry that these transactions are reflecting in your appropriation account. Any problem?
No, sir.
No, sir.
If the question
No,
says
sir.
that please treat salary as a charge against profit, then this will be transferred to your
P&L account.
So question does not say anything, sir. The question is silent. Then appropriation. If the question is silent, always these items have to be treated as item of appropriation. You will take them to P&L only if the question is specifically saying to treat this as charge. Wonderful. Next comes the concept of interest on capital. So here there is a partner B who has given capital to firm. Since firm is enjoying this money, firm has to pay something in return called as interest on capital. Sir, for that only firm is giving profit sharing ratio, no? Profit sharing ratio is for the risk that has been taken for doing the business. Capital enjoyment, for the capital that you're enjoying, the compensation that you have to pay is interest on capital. Why that? I'll discuss in the next class when I do the IOC. There's a logic that I already discussed in regular class. One more time I'll discuss in the next class. As of now, just remember in mind that IOC is the interest to be paid by the firm to the partner. Hence, it is an expenditure for the firm. So, what is the due entry for this? Same thing. Interest on capital expenditure account debit to B's capital account, partner's capital account. Since interest is a nominal account, you have to transfer this to appropriation account. So, what is the entry?
P&L appropriation
to interest on capital. That is how to interest on capital comes into your P&L appropriation account. Interest on drawing. What is interest on drawing? So, this is basically the firm. Firm is giving the money to the partner whenever the partner wants the money. If partner keeps on withdrawing the money as and when he feels like it, then what happens? There's a indiscipline. If the money is there in the business, you can enjoy that money for the development of the business. The money, whatever I have in the business, I will not keep it idle. I'll be using it for the development of the business. That money which is there for the development of the business, if you keep on withdrawing, there will be no control, no? So to ensure the discipline is there, they impose a penalty on the withdrawing partner called as interest on drawing, so that he will withdraw only that much money as much he requires. If the interest on drawing is not there, no, he'll feel like withdrawing whenever he wants, and he'll keep on drawing how much money he wants. And because of that, the other partners will start feeling bad. If there are three partners ABC, A continuously is withdrawing money, B and C will get angered a point later. They'll start fighting with A. If you don't want all this to happen, you ask the partner to pay the interest on drawing. So at least B and C will be relaxed. Okay, this person is in need of money. He's taking this money, and for that he's paying the compensation also. And that income is coming to whom? Firm. If it comes to the firm, ultimately who will enjoy that money? All the partners. So some compensation if you give, no, the other partners will stay silent. When you enjoy something, stand alone. And when that enjoyment is not being, enjoyed with other partners, that's when the enviness comes. People feel very bad about you. As long as everybody is enjoying, then no problem. So here, if the partner is enjoying some money, for enjoying that money, he has to pay interest to the firm. So firm here is receiving the interest or paying the interest?
Receiving the interest.
For firm, it is income or expenditure?
Income.
So what is the entry for this?
Partner's capital account.
Partner's capital or
current account.
Partner's current account debit to interest on drawing. Interest on drawing is a gain. Create all income and gain. And until that person gives me the money, I'll catch hold of his capital. I'll catch hold of his capital. Interest on drawing is a nominal account. To close interest on drawing, you have to put in debit to
P&L
appropriation account. Always IOD will be in appropriation only. Like IOC salary commission, it will not go to P&L account. IOD will always be in your appropriation account only. Is this point clear?
Yes, sir.
Appropriation by IOD. Easy?
Yes, sir.
Now, finally, this ledger has got some amount. You have two options. Let's suppose $1,50,000. Total 150.
Yes, sir.
40,000 given. in form of salary, IOC and reserves. What is the balance profit left? 30,000.
Yes, sir.
Correct? No. 1,50,000 is total income. 1,50,000 total income. How much we gave? 40, 40, 40. Means 40 to 3 is how much? 120.
120.
From 150, 120 is gone. What is the balance?
30.
Two options. First option, you can distribute both. I mean, this 30,000 to both the partners A and B. Let's suppose there are two partners A and B. A's capital account, 2B's capital account, you'll distribute in the profit sharing ratio. What is the profit sharing ratio? Equal, let's suppose. In our example, let's take equal. 15,000, 15,000. So what is the balance of this ledger? 0.
0.
So this is one option where you can transfer the remaining amount. After the item of appropriation, remaining amount you can transfer to the partner's capital account in the profit sharing ratio. Either partner's capital account or partner's current account.
Current account.
Or sometimes we are not sure what to do with this money. And the partners are very clear that they don't want to draw the profit. They feel that this 30,000, if it is there in the business, it will be useful. But they don't know what to do. They don't know what to do. How much are they want to transfer to reserve? They transferred it. But this 30,000, they are not able to decide whether should I withdraw, should I save it. They're still in dilemma. Then what happens when you balance this ledger will have a balance carried down.
Carried down.
When you're not able to decide what to do with this money, this ledger will always have a balance carried down, because this is also normal ledger, no? At the end, when the ledger is not automatically balancing, then artificially it gets balanced like this only. To balance carried down. Correct? No. So ledger can be left like this, having a balance carried down also. If this ledger is left with the balance carried down, it means that this profit is undistributed. This profit is undistributed, or this profit is accumulated. So now this goes where in the balance sheet? Credit side, liability side. This goes to liability side as P&L appropriation account. So we saw in the case of CPSR admission retirement, if there is any P&L appropriation on the credit side, liability side, you're supposed to distribute to old partners in the old profit sharing ratio. What did we call that as? Accumulated profit or undistributed profit. So how did the P&L appropriation account end up in the balance sheet liability side? Why? Because the ledger, you could not decide what to do with that amount and you kept it as it is. The balance was kept as it is in the ledger. Hence that ledger balance traveled to the balance sheet. In any ledger, if there is a balance brought down and carried down, it will automatically travel to your balance sheet. Automatically travel to your balance sheet. Even for that matter, sale account is there, no? If you leave it without transferring to trading account, if the sale ledger has got a balance, it will go to the liability side, balance sheet. That is the default rule of the accounts. If any ledger has got a balance, it will go to the balance sheet. If you don't want the balance to be carried forward to balance sheet, close it and transfer it to trading account, or in some account wherever you want to transfer. Am I loud and clear?
Yes, sir.
Third, what you can do, a combination of both. Means out of this 30,000, 20,000 transfer to A and B, 10 each, and remaining 10,000 kept as it is. So these are the three permutation and combination possible in the process of preparing the appropriation account. Any doubts in this?
No, sir.
No, sir.
No, sir.
Now, the four cases that is happening here, people. The 4 cases that is happening here. Before that, these 2 items are there, no? Salary, commission, remuneration, IOC. These items are there, no? These are called as items of appropriation. Okay, these are called as item of appropriation. Now, in the P&L, the balance is 10 lakh net profit. And all the item of appropriations are, let's say, put together. That is salary, commission, remuneration, everything put together. I'm talking about item of appropriation. Item of appropriation means distribution. So what will you distribute? Salary, commission, remuneration. IOT is not an item of appropriation. I'm talking about expenditure side. All put together is, let's suppose, 6 lakh. Clear? Now, please tell me, there are 4 cases that I've discussed here. There are 4 cases I've discussed here. When profit is more than item of appropriation, when profit is equal to item of appropriation, when profit is less than item of appropriation, and loss. Which case is this? Which case is this? Online people, which case is this?
First
Case which I gave in the whiteboard. P&L net profit. net profit 10 lakh, and all the item of appropriation, that is salary, commission, remuneration, IOC, all put together 6 lakh. So which case is this?
First case.
First case. When the
First
net
case.
profit is more than item of appropriation. Profit is 10 lakh, whereas item of appropriation 6 lakh. This is understood. Then comes B case. P&L net profit 10 lakh. Item of appropriation 10 lakh. Means case 2, profit is equal to item of appropriation. Then comes case 3. P&L के अंदर net profit is there 10 lakh, but item of appropriation all put together 15 lakhs. When profit is less than item of appropriation. How much is profit? 10 lakh. What is item of appropriation? 15 lakhs. Last case, when the P&L has got a net loss of 10 lakh. Is it 10 lakh or net loss? 4 cases. Understood or understood? Question understood or understood?
Understood, sir.
Now,
Yes, sir.
with this question 1, we should be able to solve the 3 cases. 4th case is very easy. 3 cases we'll discuss. Mr. A and B are partners sharing profits equally. Calculate the amount of profit and loss to be transferred to respective partners' capital account based on the information provided below. So I'm focusing on case 1. I want all of you to prepare the P&L appropriation account right away. Case 1, net profit 9 lakh, IOD 20,000 of A, IOD 10,000 of B. IOC for A is 2 lakh, IOC for B is 1 lakh. Salary 3 lakh of A, commission 150 for B. You have to do this question and tell me which of these 4 cases this case 1 is. I have to compare the P&L with item of appropriation. I have to compare the profit with item of appropriation. Which of these or among which of these are items of appropriation? Is commission an item of appropriation?
Yes, sir.
Okay.
Sir.
Is salary an item of appropriation?
Yes, sir.
Is IOC an item of appropriation?
Yes, sir.
Is IOD an item of appropriation?
No, sir.
No. Rightly said. This is not an item of appropriation. So now, please total the green ones. 2 lakh plus 1 lakh plus 3 lakh plus 150. How much it is?
750.
750. What is the net profit? 9 lakh. Which
9
is
lakh.
more? Which is
First
more?
case.
Profit is more than
Profit.
item of appropriation. Which case is this?
First case.
1.
Case 1.
Now prepare the appropriation account, please. IOD is income. It is not item of appropriation. No? So this is, see, no. See, if you involve IOD, the profit is only going to increase. No. Because of that, the case will not differ. I'm trying to put that point forth. I'm not saying don't put IOD in the appropriation. You will put it. See, what are we doing? We are doing profit versus item of appropriation. This is income. This is expenditure. We're trying to see which is more and which is less. IOD is in P&L stream. No. You include it here. IOD is not an item of appropriation. It is an item of profit. What did I ask? I asked which of these are item of appropriation. Means expenses. So IOD will be added to the P&L. Am I clear? Now prepare the appropriation account, people. Prepare the appropriation account. How much is net profit?
9 lakh.
9 lakhs. IOD. What is the closing entry for IOD? Wait, I'll ask. Lakshya. Closing entry for IOD. P&L appropriation to IOD. So as per you, IOD should come in the to debit part. P&L appropriation to IOD. Dekha? This is the power of not revising. She gave the answer. But what did you do? After this, you didn't even think. You said P&L to IOD. So 2 IOD is coming debit side. Even if you answer wrong, if you're connected, your tongue and the brain, if it is connected, you will introspect what you said. So what happened? You blabbered and left. You did not think a second what you said is right or wrong. No, this is the situation of not only Lakshya. This is the situation of almost 80 to 90% people. Don't laugh. You guys are no less than her. Huh? I'll come one by one to everybody. Always think and answer. If you're answering, after at least answering, again rethink that what you've done is right or wrong.
2 is salary account bracket, 2 is capital.
Now I'm coming. The question what is being asked here is that, sir, should I write 2 A's capital here or 2 A's salary? Now, please tell me what is the entry for the due entry for the salary?
Salary to A.
Salary to A. Account debit to
A's capital.
partner's capital or A's capital. Wonderful. A's capital. Then what is my next entry?
P&L appropriation to salary to
P&L appropriation. Account debit to
Salary to
salary to A. Now tell me, will you write 2 salary to A or 2 A's capital?
Salary to
2
A.
salary to A. This is what you will write in now. So 2 salary to A. How much it is?
3 lakh.
Salary is 3 lakh. Okay. Then commission is for B. 2 commission to B. How much? 1 lakh?
1 lakh 50.
50,000. Then IOC. 2 IOC to A and 2 IOC to B. How much? 2 lakh and
2 lakh, 1 lakh.
1 lakh.
no talking, please. Shh. And by interest on drawing of A
A.
and IOD of B. How much?
20,000.
20,000, 10,000.
20,000, 10,000.
10,000.
Now, what is the final distributable profit?
180.
1 lakh?
80,000.
My question goes to all of you. This final amount is called as what?
Divisible profit.
Divisible
No,
profit.
no. This is called as net divisible or net distributable profit. Divisible profit means what? Before minusing the GR, what you get is divisible profit. Once you minus GR, it becomes net divisible profit. In this case, since GR is 0, so divisible profit and net are both are equal, same. But final profit is always a net divisible profit. What am I supposed to do with this? Distribute to
Distribute among partners.
Partners.
profit sharing ratio. What is the profit sharing ratio?
Equal.
Them. How much it is?
90,000.
90,000, 90,000.
P&L appropriation account debit to A's capital
to B's
and
capital.
to B's capital. How much?
90,000, 90,000.
90,000. Easy.
Yes, sir.
Any difficulty in recording the journal entries?
No, sir.
Any
No,
difficulty
sir.
in preparing the appropriation format?
No, sir.
No, sir.
Somebody called me online. Nobody called me? Okay. Can we do the second part now?
Yes, sir.
Yes, sir.
Now there is a net loss of 9 lakh rupees. Oh, which case is this? Fourth case.
Fourth
Net
case.
loss. Now below that they have given IOD, IOC, salary, commission. Wonderful. What do we do? Sir,
Yes,
6
we
lakh
want
rupees
a loss among
it's a
partners.
loss directly. No.
Sir, we will only record IOD.
Correct. You will only record the IOD. Now, please understand. The purpose of P&L appropriation account is to distribute the profit or distribute the losses. It is appropriation account. Appropriation means what? Distribution. Here, in the appropriation account, you have no authority to increase the profit. You have no authority to increase the loss. Already 9 lakh loss is there. If I record IOC, the profit will, so loss will increase. IOC is what? Expense, na? Salary commission is expense. If I record this, my loss will further increase. So we will not do any action which increases, which causes of increase in loss in the P&L appropriation account. Why? Because ultimately, when you record the salary commission, this loss is increasing. No, the loss will fall on the burden of the other partners. If I'm paying, let's say, salary to A, let's say I'm not paying any salary to B at all, no commission to B. So now because of salary, the loss is increasing. And that incremental loss effect is falling on whom? The other partner. So we should not affect the partners because of this process. A partner's loss, which is coming from the business, that much loss only the partner should be forced to absorb. A fresh new loss of the other partner, if you ask to bear him, no, it will be out of control. So please don't do that. So if there is any loss in the P&L account, at the max, what you can do, no, transfer this to appropriation account, record IOD, because IOD, when I record, the loss will reduce. IOD is income. So when I record income, my losses will reduce. That only you are allowed to do. In case of loss, you will not record salary, IOC, commission, remuneration, whatever. Even if the agreement is mentioning give so much of salary, give so much of IOC, still you will not do it. Because we are not creating any new expenditure in the event of existing loss. Am I clear? So now in this case, what are they supposed to do? Transfer the 9 lakh rupees from P&L to appropriation account, record the IOD. Your loss will get reduced. That loss you have to distribute in the profit sharing ratio to the partners. Sir, I have a question here, sir. Let's suppose IOD also is not. 9 lakh net loss is there. Can I transfer that loss from the P&L account itself? You can do it. Allowed. In case if there is no IOD, then you have two options. You can distribute the loss directly from the P&L account itself. Allowed. You will see in few questions they are doing that way also. Or you can transfer this to appropriation account and from there also you can distribute. But when IOD is there, confirm the loss needs to be transferred. Why? Because IOD has to be recorded now. Appropriation has to be prepared. And hence the loss will reduce and accordingly you'll have to distribute. Am I clear? So if only loss is there, no IOD, you can distribute the loss from the P&L account itself or transfer it to appropriation and then distribute. But when you have IOD, confirm loss has to be transferred from P&L to appropriation account, record IOD, reduce the loss and then distribute. Yes, Atmika, what is your doubt?
Sir, but if the question specifies to treat IOC salary as a charge, we will still subtract it, right?
100%. Now, let's suppose the same case, net loss. Now, the partnership deed says that please treat IOC salary commission as a charge against profit. Then there is no other option. Then in that case, the salary commission IOC is with the third party. In this case, the partner becomes the third party. Then you have to charge the expenditure and because of that, the loss will increase. Let it increase. Because in charge against profit, we are not bothered about the loss increasing and decreasing. I'm only talking from the point of view of appropriation. If these three are the item of appropriation, in the event of loss, you cannot record it. But if they're asking to treat this as charge against profit, means you're taking it to P&L, then you have to record this expenditure, which will result into increase of the further losses. That is allowed. Atmika, am I clear with my point?
Yes, sir.
Now please prepare the appropriation account. Fatafat, fast. What is the journal entry for transferring the loss from the P&L to appropriation account?
P&L appropriation.
P&L appropriation
account. P&L account.
To P&L. How much? 9 lakh.
9 lakh.
IOD remains as it is. IOD amount is the same?
Yes, sir.
Why is there a discussion? No discussion, please. Now, कौन बोला बीच में? तू नहीं बोला, तेरा मुंह तो बोला होगा ना? हाँ, ठीक है, okay. Now, 9 lakh. 9 lakh is the loss. These two are the income. Please tell me what is the divisible loss, net divisible loss?
8,70,000.
9 lakh minus 30,000. 8 lakh?
70,000.
What will you do with this 870? Distribute to partner's capital account. So this loss is the money that you have recovered from the partner. See, profit is the money that the firm has to pay to the partner. So we have to remember to pay to the partner. So what is the profit entry? P&L appropriation to partner's capital. Crediting means you are creating a liability. Means this is a way where the firm is promising the partner that I will pay in the future. Anything that I have to pay in future is liability. So how profit we have to pay to the partner, like that loss we have to recover from the partner. The ultimate result of the business, profit or loss, is belonging to whom? Partner. Business is into profit. So business has to give this profit to the partner, saying what? Partner will say that I worked hard, so I deserve the profit. So when business is going to give you the profit, in case of incurring loss, business will recover that money from you only, no? So until the partner gives me the money, I'll catch hold of his capital. What is the entry here? A's capital, B's capital to P&L appropriation. In the appropriation account, Buy A's capital and buy B's capital. Buy A's capital and buy B's capital. 870 divided by 2 is how much? 4,35,000. Any problem?
No, sir.
Everybody, please open your mouth and answer online.
No, sir.
No, sir.
No, sir.
No, sir.
Now, case 3. Net profit 5 lakh. Please total the item of appropriation. 4, 5, 6, 7, 8, 9, 10 lakhs. Profit is less than item of appropriation. Which case it is? Case 3.
3.
Now, what are we supposed to do? You have to prepare a tabular column.
Ratio of
Derive a ratio of appropriation. We have discussed the logic of this in depth in the regular class. No time to discuss the logic, so I'll straight away give the solution. Whenever a scenario comes where your item of appropriation are more, profit is less, do not distribute item of appropriation in accordance to partnership deed. This is a different calculation which has been suggested. First step. Step 1. Prepare the tabular column, in which the first column is
Partner.
particulars, then A, and then B. Now, what are we trying to document here? So, we are trying to document the expenditure, item of appropriations. What is the first item of appropriation? IOC. IOC should be given to both A and B. How much to A? 2 lakh. How much to B? 1,50,000. Next appropriation item is salary.
Salary.
How much salary should I pay? 4 lakh. To whom? Only A. 4 lakh only to A. Nothing to B. What is the next item of appropriation? Rangu? IOC. Wonderful. Chimti mar usko. Daydreaming in the evening. Hey, Monizera. Are you sure? எங்க இருக்கு டெக்ஸ்ட்புக்ல இல்லையே 7ஆம் क्वेश्चन எங்கிட்ட தான் இருக்கு அப்ப நீ அங்க ரங்கு கண்ணுல தண்ணி வந்துட்டா எனக்கு யாருக்கு டு whom இதுக்கு மேல வந்து கான்சென்ட்ரேட் பண்ணாம இருப்பியா promise how much 2,50,000 இதுக்கு நாளைக்கு வராம இருந்துறாதடா சும்மா தமாஷ் பண்ணு ஃபீல் பண்ணல ஓகே டோட்டல்
6 lakh, 4 lakh.
6 lakh
4 lakh.
4 lakh Riya, once again I'm coming ma 6 lakh is to 4 lakh. Please simplify this.
3 is to
3
2.
is to 2. This is the final simplification. Now this is called as ratio of
Appropriation.
appropriation. Correct? Now step 2. Step 2 is not compulsory. Once you get the ratio of appropriation, directly you can do the calculation of appropriation account. Okay. But here, what is my net profit?
5 lakh.
Net profit is 5 lakh. Now this I'll distribute between A and B in the ratio 3 is to 2. And this 3 is to 2 is not the profit sharing ratio. This is the ratio of appropriation. Why the ratio of appropriation? Why not profit sharing ratio? Why ratio of appropriation? Why not other things? We discussed the concept logically in the regular class because we had a lot of time there. We discussed all the masalas there, but no time here to discuss all the masalas. So what is the answer? 3 lakh is to 2 lakh. 3 lakh is to 2 lakh. Now what are they supposed to do? When you open the appropriation account, P&L appropriation,
By P&L.
by P&L, 5 lakh rupees. Since this 3 lakh and 2 lakh, what you're paying? Since the 3 lakh and 2 lakh, what you're paying is how much towards IOC, how much towards salary and commission, you don't know. So directly you'll give the entry in the partner's capital account. So 2 A's capital 3 lakh, 2 B's capital 2 lakh. Any problem here?
No, sir.
No, sir.
No, sir.
God bless you. I don't want the another method because people get confused. This is the simplest way. You tell me in my ears after the class gets over. I don't want to confuse these people. Guys, are you all clear with this point?
Sir.
Yes, sir.
What करना important है? How will you get the ratio of appropriation if you don't show it? हाँ. For this will carry step mark, no? Or else I will assume that you copy pasted this from somebody else. Oh, सब होता है.
Sir.
कोयम्बतूर में होता नहीं है, तेरे को लगता है? नहीं होता है यहाँ पे. North Indians. हाँ. You saw that movie? Which movie? 12th pass, no? Which movie is that? Fail, sorry. Pass is only pass passing on this. 12th fail, sorry. In that movie is openly said. Yes, Riya.
Sir, if there was interest on drawing.
One second. Guys.
Sir, if there was IOD in this question, we won't subtract it to find the ratio of appropriation, right?
If what?
If there was IOD in this question.
Okay. Now the question, sure. Sir, if IOD is there, what am I supposed to do? Will I put IOD and minus it? No. We are trying to calculate the ratio of appropriation. What are the ratio of appropriation items, or what are the appropriation items? Always appropriation of item is expenditure side. Always appropriation of item is expenditure side. Always charge against profit is expenditure side. So when we talk about charge against profit, an item of appropriation, we are talking about the debit part only. So when I talk about ratio of appropriation, means I should consider only the debit part of the appropriation account, which means expenditure part. Am I clear? Not even GR here. GR is not my expenditure. So I have to only consider the item of appropriation, which is expenditure part only. IOD given means don't consider the IOD part. No, appropriation will come. See, in appropriation, what happens? In this net profit, 5 lakh is there, no? In this 5 lakh, you will add the IOD part and put together this value will break up into 3:2.
Or general reserve also 5 lakh is the rest of the
General reserve, anyways, they'll give you separate minus and then you'll do it. Once again, I'll come. Now, there are 2 more questions. Okay. So, if IOD is there, what to do? Don't put IOD here. Don't put IOD here. You will add IOD to your P&L. Let's say IOD in this question is 1 lakh. So, plus 1 lakh. How much? 6 lakh. Divide this in the ratio 3:2. Clear? Imagine general reserve is there. What are we supposed to do? From the 6 lakh, first give GR general reserve 1 lakh. Remaining 5 lakh is there, no? That should go in the item of appropriation. Good, 2 questions.
Sir,
One Riya asked, second Yash asked. Yes.
sir, so this means while comparing the profit with item of appropriation, we have to include IOD.
IOD in the P&L. That's right.
Yeah.
Clear?
Yes, sir.
Now come back. When profit is more than item of appropriation, what are you supposed to do with the profit? Distribute the items. Distribute the item of appropriation as per the partnership deed, and then whatever the balance profit is there after appropriation, it may be distributed in the profit sharing ratio. Correct? Why I use the word may? It is not compulsory to distribute. You can have a balance carried on also in that ledger. That is why the word may. Shall means what? Compulsory you have to distribute. May means what? Optional. When profit is equal to item of appropriation, distribute the item of appropriation means expenditure side as per the partnership deed, and after that there is no profit left to be distributed in the BSR. Correct? No? When profit is less than item of appropriation, distribute the items of appropriation in the ratio of appropriation. When there is a loss, distribute the loss without distributing the item of appropriation. Without distributing the item of appropriation. What is the item of appropriation? IOC, salary, commission, remuneration shall not be debited. However, the IOD being an item of income shall be recorded on the credit side. Okay, not okay?
Okay, sir.
Now, the next part is methods of maintaining capital account. Now, you might be wondering, sir, you're not doing more practical questions. I will do it. Not now, probably after discussing the concept of IOC, IOD. There are 1 or 2 questions that I picked up from the exercise. In that, there is calculation of IOC, IOD. Calculation is involved. So if I do that question now, without telling you the calculation of IOC and IOD, it will not make sense. So maybe once I complete the concept of IOC and IOD, calculation part, Then we'll come into a few more practical questions. And for that, you have to help me. In the group I've texted today morning. See, I don't want to repeat the same questions what I've done in the regular class. This is the time for me to do a different question. So now I've given all the time this far so that you can sit and work out the book back, scan a question, chapter back, exercise question, sample paper, board papers, etc., etc. Now, please pick and choose and give me the question. So this question I find very challenging. It's quite unique. Can you please solve it in the class? If you share those questions, I can do it in the class. One or two, three random questions I can pick and choose, which I feel which is very unique. I will do it. But there's so many questions. I cannot sit and go through all the questions. Imagine you are writing board exam. Is it possible for me to sit and go through all the questions? Very difficult. You can do it, but very difficult with the given time challenges. So my humble request to all of you, if you have worked out exercise questions, scanner questions, board papers, sample papers, not just of current year, past years also. If you come across any question which is very unique, pertaining to this chapter, please share that question copy in the textbook. I mean, in the WhatsApp group. I'll take that and solve in the upcoming classes. Am I loud and clear? Online
Yes,
people, am I
sir.
loud and clear?
Yes,
Yes,
sir.
I
sir.
think I should just put some 2 questions today. Correct. So like that, please put it. If I find it is worth doing it, I'll do it. If it's an easy one, maybe the person who's got a doubt in it, I'll explain it separately. But if that question is that worth it, which means that I have to give a clarity to everyone. If I have a feel like that, then I'll do that question in the class. Now next comes the concept of methods of maintaining capital account. In the sole proprietorship business, you are only one single capital account. That's all. Now here we have 2 different types of capital account. One is to be maintained based on fixed capital method. Second is on the basis of fluctuating capital. If you want to maintain the fixed capitals, means you'll open 2 account of the partners. One is called as capital account. Second is called as current account. There's a logic behind having the 2 different accounts. If you feel that I don't want to do this drama, extra work, we don't want to break our head in this, then you can follow fluctuating capital method where only one single common capital account is being maintained. Now the question that comes is, when the question is silent about the method of maintaining the capital account, you are reading a question. In that question, you are not able to understand what method of capital account they maintained. The question is silent about it. In that case, it is always assumed that the question have maintained the capital under FLCM. FLCM means what? Fluctuating capital method. So when will you imagine that this is fixed capital method, or when will you consider this as fixed capital method? 2 indication will be given. 2 indication. Indication for maintaining the capital under fixed capital method. 1. Directly the question mentions that FCM is maintained. They'll tell theoretically, they'll mention a line that the firm is maintaining the capital under fixed method. Very straightforward. Second, they will not mention it directly. Indirectly, they'll give a hint. How? In the question, they'll have fixed capital ledger separately, current account ledger separately. So whenever you find, they'll use the word fixed capital. They use the word fixed as a prefix to the capital. So they would give information of fixed capital account and current ledger balances separately. Fixed capital is so much. Current account balance is so much. When they give it separately, means what they're following? Fixed capital method.
Fixed capital.
Under fixed capital method only, you follow the capital account separately, you prepare the capital account separately and the current account separately. So either directly they'll tell you that yes, boss, I'm maintaining fixed capital method, or they'll tell you indirectly. How? By giving the fixed capital ledger balance and the current account ledger balance. So these ways you can identify whether the question is maintaining the capital under FLCM method or FCM method. Any problem?
No, sir.
Now, under fixed capital method, how many accounts are prepared? 2. One is
Capital account.
capital account. Second is
Current account.
In this capital account, only 3 information is captured. Opening balance of the capital, additional capital, drawing against capital. Only 3 things. So opening balance means, please tell me which side, debit side or credit side, the opening balance comes?
Credit side.
Credit side. As by
Balance
brought down. During the year, if the partner is giving the capital additionally, then what is the entry?
Capital.
If the capital is coming in form of cash, let's suppose. Cash account
Cash
is
to capital.
In capital, by cash. If the money is coming in check,
By bank.
bank to capital, by bank. If the capital is coming in form of asset, Asset to capital. Who said capital should be given only in form of cash in bank? Capital can be given in kind also. It can be given in asset also. So in that case, it is cash account debit, bank account debit, asset account debit
Asset
to
account.
capital.
Capital account.
Buy cash, bank, or asset. Capital is credit balance. To increase capital, credit.
Credit.
To decrease capital,
Debit.
debit. So one item is this. Second item is this. What is third item? Drawing against capital. When the question says that we have withdrawn the capital, so what is the entry?
Capital account.
Capital is withdrawn.
Capital to cash or bank.
Two entry possible. One, drawings account debit to cash or bank. And this drawing ledger has been adjusted against capital. We
Capital.
knock off the drawing against capital. So what is the transfer entry?
Partner's capital.
Capital account debit to
Drawings.
drawings. So if you're following this method, two drawings will come. Two drawings will come. This also we discussed, you remember?
Yes, sir.
Sometime they will combine both the entries into it, which means they don't want the drawings ledger to be separately created. So what they will do, they will eliminate this and they'll pass a direct entry, combined entry. What is the combined entry?
Capital
Account debit to
cash.
In that case, what is the drawings entry?
To cash.
Cash. These are the two possibilities of drawing against capital. So this is method 1 of recording the drawings entry. This is method 2. In method 1, they want the drawings to be accumulated in the drawings account so that you get to know what is the total drawing done in the entire year. If you have the drawings ledger separately, the advantage is that when you go to drawings ledger, you'll get to know every month what amount is withdrawn. Properly, you'll get to know. But if you combine the entry and pass, no, you're not able to understand which part is withdrawn, how much money in form of drawings. Hence, this method is always advisable. But second method also nothing wrong. Since item involved in this is very less, no? Because apart from this transaction, what do you record? This. So experts felt that method 2 also is accepted. So either you write a combined entry, capital to cash, or you write it separately by inserting the drawings on the either sides. Any problem?
No, sir.
No,
These
sir.
are the only transactions that should be reflecting in the capital account. Because the name itself is what? Capital account. In this, we should not have anything other than capital.
Capital.
So what are the other items apart from capital? Everything is capital. No. There are routine transaction which happens on yearly basis between the firm and the partner, which creates liability, which creates reversal of liability. Those routine transactions should not be affected on the capital. So for that, day-to-day transaction, a separate ledger is maintained called as current account. One more reason for maintaining the capital and the current account separately is because if you maintain capital account separately, the calculation of IOC becomes smoother, easier. When you combine everything like khichdi, then what you're supposed to calculate interest or not, you get confused. If people want the interest to be calculated on the pure capital, they will always prefer to have the capital in a separate ledger and the routine transactions in the separate ledger. Am I clear?
Yes, sir.
My
Yes.
question goes to all of you. Can the capital account under fixed capital method have credit balance?
Yes, sir.
Yes, sir.
What is my question?
Credit.
Can the capital account under fixed capital method have the credit balance? You're saying no.
Yes, sir.
Yes, sir.
Capital have
It
credit
has.
balance
Yes,
only,
sir.
no?
Yes, sir.
Capital, मैं क्या बोला? Judge me and I'll prove you wrong. I knew. If I ask you in this tone, you will say no. That's why using the word, instead of using the word debit balance, I use the word credit balance.
Credit balance.
So capital will have credit balance only, no? Sir, how, sir? Opening balance 1 lakh. Additional capital 4 lakh. How much total capital? 5.
5
In that
lakh.
2 lakh withdrawn. What is the balance?
3 lakh.
3 lakh. 2 balance carried down.
Carried down.
And by balance brought down. The balance brought down is coming on credit side. What it becomes?
Credit balance.
So always capital account will have the credit balance. Now the question is twisted. Can the capital account have the debit balance?
No, sir.
Can the capital account have the debit balance?
No, sir.
Think an answer. Think an answer. Under
No,
fixed
sir.
capital method.
No, sir.
Not possible. How will it become debit balance? You think through common sense. 1 lakh and 4 lakh. How much money you have in the capital account? 5
5
lakh.
lakh.
5
For you
lakh.
to make this debit balance, you should withdraw more than what you
5
have.
lakh.
So let's suppose drawing against capital. I'm putting 7 lakh here. So what is the difference now? 2 lakh is the
2
difference.
lakh.
By balance carried down 2 lakh.
Carried on.
And 2 balance brought down 2 lakh. Now balance brought down is coming on which side?
Debit
Debit
side.
side.
So this becomes debit balance.
Debit
Debit
balance.
balance.
Is this situation possible?
No, sir.
What is this? 2 cash withdrawal of money. Ready? When you have only 5 lakh as capital, how can you withdraw 7 lakhs? Think about it. So in case of fixed capital method, capital account will only have the credit balance. It will never have the debit balance. Unless until you pass the wrong entry. Imagine you have withdrawn only 5 lakh. But journal entry what your accountant by mistakenly recorded 7 lakh. Then the ledger will become debit balance. But is it practically possible to withdraw the money more than what you have?
No, sir.
No.
Am I clear? So normally they say that capital account under fixed capital method will have only credit balance, will never have the debit balance. Am I loud and clear?
Yes,
Yes,
sir.
sir.
Now, sir, what do we record in current account? All your day-to-day transactions, salary, commission, profit sharing ratio, drawing against profit, etc., etc. Please tell me what is the entry for the salary, due entry for salary.
Salary to partner capital.
Salary account debit to partners, current account.
Current
Salary
account.
to current account. In current account, by salary.
By
By
salary.
salary.
By commission, by IOC,
IOC.
by P&L appropriation. What is the journal entry for distribution of net divisible profit? P&L appropriation to partners capital or current account. In partners current account, by
P&L
P&L
appropriation.
appropriation. So this is share of profit. Share of loss
To P&L appropriation.
to P&L appropriation. What is the due entry for interest on drawing? In case of fixed capital method. Partners current account debit
Current
to interest
account to
on
IOD.
drawing. In partners current account, to interest on
To
drawing. All these are liability and reversal of liability. Liability means what? This much money the firm has to pay to the partner. Every transaction has got twofold impact. Salary has got twofold impact. One is expense impact, second is liability impact. Expense impact goes to your P&L appropriation account. Now we are documenting the liability part and the reversal of the liability. So these are all the creation of the liability. And these are all the reversal of the liability. Any problem?
No, sir.
No, sir.
So there's something called as drawing against profit. Means this money you want to withdraw in advance. Drawing against profit. What is the journal entry for drawing against profit?
Partner current account.
Journal entry. When you withdraw the money.
Drawings to cash.
Drawings against profit.
Drawings to
Drawing
cash.
against profit. Drawing against profit account debit to cash.
Cash.
Let's say 1 lakh, 1 lakh. And this drawing you want to knock off against the current account, not capital
Current account.
You're doing fixed capital method. So this drawing will be adjusted against the current account. This 1 lakh is the money withdrawn against profit. Where do you record the profit? In capital or current account?
Current account.
Current account.
This 1 lakh is the money withdrawn against profit, and the profit is there in the current account. So this will be adjusted in the current account. So what is the adjusting entry?
Partner's capital to drawing against profit.
Partners current account
Current
debit
account.
to drawing against
Drawing
profit 1 lakh, 1 lakh. So now to drawing against profit. To drawing against profit will come into picture. Any problem?
No, sir.
Second is you can pass a combined entry. In that
Combined
case, what happens? This ledger is knocked off. So what is my combined entry? Partners current account debit to
Cash.
Any problem?
No, sir.
No, sir.
Sir, what is the meaning of all this, sir? Let's say salary. You have to pay 1 lakh to A. commission 1 lakh, IOC 1 lakh, profit appropriation 2 lakh. So total how much money we have to pay to the partner?
5 lakh.
This 5 lakh belongs to whom? Partner. But physically the money is with whom? Firm. So if firm has to pay this money in future and firm is Gajani, it will forget. So to create a long lasting memory, they'll record it. So liability has been created. A liability has been created. Any problem?
No, sir.
Out of 5 lakh rupees, let's suppose we have to receive 10,000 rupees from the partner. So will we tell partner, you take 5 lakh, give me 10,000. Will you do two separate transactions? Common sense says what? I have to give you 5 lakh. The 5 lakh what I'm going to give you, in that I'll minus the 10,000 what is supposed to give me. So that is how the 10,000 IOD is being subtracted. If credit is plus, debit is minus. I have to give you 5 lakh. From that 5 lakh rupees, what you have to give me, I'll minus and give you the balance how much? To balance get on how much?
4 lakh 90.
And imagine out of this 5 lakh, out of this 4 lakh 90,000, balance is 490, no? In
Yes,
that,
sir.
the partner is already withdrawn 1 lakh as drawing against profit. So what will I say you? In this 5 lakh what I'm going to give you, I'll minus the 10,000 what you have to give me, and I'll minus the 1 lakh rupees already which you have withdrawn. Correct? No, the money which is already taken, I should deduct that. I have to give the partner 5 lakh rupees. In that, he has already withdrawn 1 lakh. So balance how much I should give?
3 lakh 90.
Forget 10,000. Forget IOD.
4 lakh.
Now forget IOD. 5 lakh I have to give you. In that 1 lakh already have taken. Will I still give you 5 lakh balance?
No, sir.
How much should I give?
4 lakh.
Then this 1 lakh should be deducted, no boss. That's what we're doing. So the 5 lakh what I'm supposed to give you, I'll minus the 1 lakh rupees which are already withdrawn. Any problem?
No, sir.
Now, IOC 3 lakh, salary 1 lakh, commission 1 lakh, 5 lakh. 5 lakh I have to pay to the partner. Now, by doing the business in the current year, the partner did not work hard properly. Because of that, there's a business loss. How much is the loss? 1 lakh. So I will tell that partner, this 5 lakh what have to pay you? No. In that, I'll minus the 1 lakh you have to pay me. The partner is asking, why should I pay you? Donkey fella, because of your lack of hard work, we incurred loss this time. So this is a punishment for you. You have to bear the loss of the business. So we'll deduct that 1 lakh. And how much we have to pay him? Balance
4 lakh.
Right, his point is correct. What is he saying? Sir, if loss is there, how the salary commission will come? Brainy fellow. Wait for you, I'm coming. By balance brought down 5 lakh. Now you tell me, man. Point is correct. So 5 lakh is the total money that we pay, opening balance. There's a 1 lakh a loss. I'll deduct that and pay the balance 4 lakh. And he said correctly, sir, salary, commission, IOC can come, provided if these are charged against profit. So loss also will be there. These three also will be there. So these three are there in the loss means because these items are treated as charge against
profit.
Understood?
Yes, sir.
Now, what is the balance?
6 lakh.
Balance brought on which side?
Credit side.
Credit side. What balance it is? What balance is this? Credit balance. Current account will only have the credit balance. True or false?
False.
The current account can also have the
Debit balance.
How? Like this. Let's say interest on drawing and this drawing its profit put together 7 lakh. $7 lakh IOD and drawing its profit put together 7 lakh. Possible, not possible? Possible.
Possible.
So what is the balance carried on now? 1 lakh
1
is
lakh.
on the other side. And the brought down is
1 lakh.
If the balance brought down comes on debit side, what balance does it become?
Debit balance.
Debit balance item. So current account can have both credit balance as well as
Debit balance.
Which means the balance brought down can come either on the debit side or on the
Credit side.
In the fixed capital method, capital account will have only
Credit balance.
Okay. Now,
Yes, sir.
Some organization says that I don't want to maintain this headache of two different ledger. What they will do, they'll combine all the ledger together. They'll make a khichdi of the both. Which method is that? Fluctuating capital method. Fluctuating capital method. FLCM method. Now, FLCM method can only have the credit balance.
False.
Sir, no. FLCM method is nothing but sum total of capital account plus current account. Okay, if current account can have debit balance, and if both are combined, the entire capital account also can have the debit balance. So how does your capital account looks like? Balance brought down of both capital and current account. Then additional capital, that is buy cash, buy bank, buy asset. Then salary, commission, remuneration, IOC, share of profit, drawing against capital, drawing against profit, interest on drawing, share of loss. Means both the ledger, if you combine, this is the capital account under fluctuating
method.
Any problem?
No, sir.
No, sir.
No, sir.
I want this example to be done. As per the partnership deed, the partners are to get a salary of 1 lakh and 120 per annum. Which means Atul is going to get 1 lakh, Amit is 120 respectively. Interest on capital 10% per annum, which is 20,000 for Atul, 40,000 for Amit. Net profit for the year is 2,10,000. What is the appropriation account? How does the appropriation account looks like? You tell me. First, prepare the appropriation account. Buy paid, how much? 2,10,000. Whenever you get this question, immediately check whether the profit is equal to more than or less than the item of appropriation. So what is the item of appropriation? 1 lakh plus 120 is how much?
220.
220, which is more than your profit. Plus 20 plus 40.
60.
2,80,000.
80. 280.
Your item of appropriation means IOC, salary, commission, all the expenditure put together is 280. Whereas the profit what you have is only 2,10,000. Can you distribute this 210 in a normal way? Two
No,
salaries
sir.
so much, two IOC so much. Can you distribute in a normal way? No. So what are you supposed to prepare?
Ratio of
Table in which you are supposed to derive the
ratio of
appropriation. So what is it? How do you calculate particulars? Atul and then Amit. What is the first item? Salary. How much is the salary? 1 lakh and 1,20,000. Then IOC 20,000 and 40,000. If I total, what do I get? 1,20,000 is to
1,60,000.
If I simplify, what do I get?
3:4.
3:4.
4.
That 2,10,000 net profit is there. No, should be distributed, should be appropriate in the ratio of 3:4. This 3:4 is called as
Ratio of
appropriation. How much do they end up getting?
90,000.
10,000 to 3 by 7, 2,10,000 to 4 by 7. You get 90,000 and 120. The question is, sir, in the question itself, they are given a different ratio of appropriation. Means the partners have predicted the scenario before itself. And they said that in case if the item of appropriation is more than the profit, let's distribute in the unique ratio of appropriation. Everybody's agreed. In that case, that ratio of appropriation you will adopt. Because if tomorrow some partner fights, you can easily show the agreement. You can easily show the agreement. Look, boss, you have agreed. And you have done as per the agreement only. So if the ratio of appropriation is already documented in the agreement, in the deed, go as per the deed. If nothing is there, then this ratio of appropriation method only you have to follow. Any problem?
No, sir.
The in between illustration, whichever is there. In that, do you have any doubts?
No, sir.
Please do it. In that, few questions are quite tricky. This concept I'll start in the next class. The next class I'll be doing the calculation of the commission part. Before charging commission, after charging commission. We'll do one discussion on this, and straight away I'll start with the concept of IOC. So next class I should be done with both this and IOC. Then after that, that is Sunday basically, correct? Monday we should be doing the IOD part. IOD we can do, and minimum guarantee also we can finish. So Monday mostly I'll try to finish the chapter. Wednesday what we'll do, whatever the questions you have doubt in this chapter, which will post it to me, and the extra questions that we'll try to solve it in the Wednesday's class. So by Wednesday we should be done and dusted with this chapter. Am I loud and clear?
Yes, sir.
Is this revision
sir.
speed good enough, or should I slow down further? Increase or the speed I'll not do beyond this.
Sir, good enough.
If you want, I can slow
This
down
is
further.
fine.
But if I slow down
This is
further,
fine.
what will happen? All the subsequent classes will get a hit. This is okay?
Yes, sir.
That's why I told you, if you want to cope up with the speed, what are you supposed to do? Do a
Revise.
revision from your end. So when you do a revision from your end and comes, one, you'll be able to remember those points in your mind. And second, you have any doubts, you can be prepared. Okay, this doubt I have, I can ask to sir in the class itself. So my humble request, after having at least 2 classes done with me, please ensure that you follow the techniques in the upcoming classes, and whatever you have done today, please go back home. Tonight one revision, tomorrow morning one revision. Revision means not revision, recollection. Do it, you'll be very comfortable. With this, we can get back on track very easily and very comfortably. Please listen to me when I'm talking. I'm repeating this 10 times. Why, 10 times when I say, at least one time you'll hear me. And that will go to your mind. With that hope, I'm repeating one more time, again and again, again and again. He's saying repeat one more time. Donkey fellow, he was talking when I was repeating. I will repeat, not today. Again in the next class. So if you want to, listen me. YouTube videos are available. Enjoy. N number of time you can watch. So that's all from my side for this session, people. I'll see you all in the next class on Sunday, 12 p.m. sharp. 12 p.m. sharp. Until then, bye-bye. See you. Take care.
Thank you,
Thank
sir.
you, sir.
Thank you, sir.
Thank you,
Thank you, sir.
sir.